Welcome to I'm Not Going to Live by Their Rules Anymore, Tax and Loan Groundhog Day. That's Ellie's great title for today's program. Today's program runs 100 minutes, but for NASBA purposes, we're issuing 2 education credits, but for IRS purposes, we are going to only issue 1, for CTEC only 1, because right now it's not, the forgiveness portion really isn't a tax item. You all know Fred, Ellie. I will draw your attention to several graffiti items that have been done. Apparently, I missed it that my bio was rewritten, so it's now a biohazard, and I really don't want to know what that hat is. But ironically, it's not in the slides. Apparently, there was some mischief going on beforehand. One of the benefits of Big Marker is that we can put the presentation up in the platform and it runs on the platform as opposed to a screen share. And this must have been stuck in the notes or something else. So it's the right slides, but somehow that popped up there.
I think you look great there, though, John.
Well, if you divide anything by 0, you still get 0. CE credit certificates, we ask you to wait for a week, but we will get them out to you probably Monday or Tuesday. If you don't have it by next Friday, please email Nicole in my office, Nicole at Tax Practice Pro, and she'll tell you to look in your spam folder, but she'll also mail you a copy of it. Okay, so to earn CE, you have to answer 4 polling questions. We're going to offer a total of 8 polling questions. The IRS says you need to answer 3 per hour. NASBA says you need to answer 75% in both cases. You don't have to get them right. You do need to try and answer, so please do for us. If you would like to watch any of our COVID-19 related tax updates, this will make 16 hours of material. It's all on our YouTube channel. Ellie has given you a nice abbreviated link there. Or if you search on Google Tax Practice Pro YouTube, it'll come right up, and all of that great material is there.
I also just pinned the link to the top of the chat.
What a nice lady, isn't she? I don't know what that means, but it sounded helpful. Ellie, you want to take over starting here at the syllabus?
Sure. We're going to start with the hardest geometry problem in the world. And then we're going to move to IRS updates. And we're going to talk about what's going on with IRS operations. This here, we will take a break after that because that is where the IRS CE will end for EAs. And the CTEC credit will end for the California tax education because that's the tax portion. The second half of the class is a PPP primer. We have 2 examples that hopefully we will get through. And if you answer all 8 questions, you get 2 NASBA credits, and that's for CPAs and I'm not sure what else. So, see, this is my fancy Wes Anderson font that got eaten up when it got transferred. The first thing we're going to move into is economic impact payments and IRS updates. And this is what the stimulus card looks like. Not quite hexagonal. So as of May 20th, 2020, IRS began delivering, as of May 20th, IRS delivered 140 million EIPs to people. We know that there are problems getting some of them out to people. So IRS also decided to begin issuing debit cards to about 4 million Americans. What they're telling us is to inform our clients so that they don't think it's a scam. The card is going to arrive in a letter that does not say Department of Treasury on it and that does not say Internal Revenue Service on it. It says Money Network Cardholder Services. So people might think it's a scam. They might think it's an ad. But that is what's going to hold their EIP card. The card is free. There's no fee to use it. And on EIPcard.com, they have a link of a bunch of ATMs that will not charge a fee if someone wants to use it and take out cash. If you go to Chase Bank or any other large bank, there might be fees that apply, so your client should be aware. This program is being issued by MetaBank, which is Treasury's financial agent, and it's a Visa card, and it looks like the card that's on the title slide that we just saw here. It'll say Stimulus Debit Card on it. And again, that website, EIPcard.com, has a bunch of information on it. If you want to send out an email to your clients reminding them that this might come, I would suggest putting the link to that website in there. The cards are going to go to individuals who do not have bank info on file and whose return was processed by the Andover or Austin IRS service centers. So it won't be everybody. Clients cannot choose to opt in on the card. Taxpayers can't do it. So they might have seen the really cool, Yahoo Mail article or the Forbes article and be like, well, I want a debit card. But they can't do that. And remember, direct deposit closed last Wednesday, so they can't go in and add direct deposit. So IRS went and they opened an EIP phone line. So they don't want people to use the 1040 line for EIPs if they don't have to. So they went and they hired 3,500 assisters to do EIP questions. And the phone number just for EIP is right there. It is 800-919-9835. If clients want to call the 1040 number, and if you're like me and telling a client 800-829-1040 just flows off your tongue, tell them to press number 7, and that'll get them to the EIP assisters. And then IRS opened up a phone number, or actually they posted it on the Taxpayer First Initiative page because they updated that on Thursday. 800-829-1954. If you have clients who are not comfortable with where's my refund, finding their refund via the website, they can call that in. They will not get a live person. It's just an automated phone number. So IRS sent us all an email dated COVID 2020-55. If you haven't signed up for IRS emails on COVID-19, go to their website, sign up for them. This one was really interesting, and I think it's probably more useful for those of us who need to communicate with clients because it reiterated questions that many of us started answering as soon as CARES came out. The big one is it isn't taxable. And I have seen some articles and I've seen some people posting that EIP is taxable. That is incorrect. They will report it on their tax return. It will not be added to their taxable income. I don't think states are going to tax it either. Have you guys heard anything about states taxing it? I haven't.
No, some might, but I doubt many or any will.
I bet it's California.
I thought Lynn Jacobs made a comment about Louisiana early on, that Louisiana gives a deduction maybe for state taxes or federal taxes. So depending how it's implemented, it could affect it. Like if I get an extra $500 of EIP money when I do the return, but I don't remember the specifics.
So the last thing that I saw was put out by Drake Software, and they said 6 states are thinking about taxing it. And if I could load that link, I could tell people what Drake said it might be, what states might do it. But I imagine by the time they roll around, those states will probably take that back. Because that would be not very popular. Okay, the states they're saying are Alabama, Iowa, Louisiana, Missouri, Montana, and Oregon. So if you live in one of those states, you might want to check to make sure what they're going to do with it. Sorry, June. California wasn't one of them. IRS did want to reiterate that payment does not affect eligibility for benefits programs. So people who get the EIP are not going to suddenly lose disability for having too much money in their bank account. Same for potentially losing food stamp benefits or Section 8 benefits. And they are now saying that those taxpayers who are going to get their checks based on just Social Security or railroad benefits can now use Get My Payment to check the status of their check. And one of the things that the new FAQs addressed, they updated their FAQs. And like we said last time, they're putting the date next to the question of the one they're updating. So you don't have to read, for example, 80 questions again under employment retention credit. They're reminding people that if the information is incorrect, if your payment is incorrect, you will true up on the 2020 return. There's no one you can reach out to get the additional money. And then one of the questions they had, which I know a bunch of us talked about, was like, let's say parent A claims child C on the 2019 return. So they get the $500, and then on the 2020 return, parent B claims child C, and they will get the true up of the $500 return. In the new FAQ, IRS basically goes, yep, that's it. And no, you don't have to pay it back. There's not a penalty associated with it. So that's that. I guess if you have clients who are worried about it, tell them not to. On the FAQ, they also updated addresses to send back checks for deceased or incarcerated taxpayers. I know there's been some debate about whether or not you have to tell clients to send it back. There is no clawback provision in the CARES Act. Right now, there's no way for IRS to enforce you getting the money back. There was a post on ProConnect via Intuit yesterday that IRS, if they find out that they gave out money to a deceased taxpayer, will take the money out of a refund. And so there was an example on where they sent $2,400 to an estate, then they sent the refund and they withdrew $1,200 that shouldn't have been paid to a deceased spouse from the refund. So I can find that link if people want it and put it in the chat when I'm done if people want to look at it. But that might be something if you have estate clients for them to be aware of.
You know, Ellie, of all the things that the IRS has said, no, you can keep it, no, you can keep it, hey, we're going to true you up. That is pretty much the two things they've said. You're not entitled to the money, right? You don't qualify.
Yeah.
Somebody who died somebody who died before the check was issued, and incarcerated folks, and they've set up a procedure to give it back. So without doing a deep dive into it, we probably have an ethical obligation to notify the client that they need to do that.
I mean, personally, I think it's, yeah. And like the FAQ now has updated addresses. From my understanding, if you're sending IRS money, they open that mail and they process it really quickly. And then any taxpayers, they are asking all taxpayers to keep the notice that arrived in the mail. So if you got a direct deposit in the past couple of weeks, you should have gotten a letter in the mail saying, hey, we sent you this to this account. It's signed by the president. They're asking you to keep that and provide it to your tax preparer next year.
So that's something that we're going to start communicating that to clients in November or December. Hey, we need to know how much you got. Figure it out. Don't hold up your tax return. I can just imagine having a stack of returns that how much was your EIP payment next year. I'm also hoping there's going to be a lookup tool.
That would be cool.
I would think there would be.
It's already on transcripts.
Yeah. Well, they're definitely on the transcripts, right? So there's an argument there too. We've been, even if people don't buy into the transcript monitoring, we've been taking powers of attorney on these returns now anyway, simply so I can go look later. But anyway, it's on the 2020 transcripts already.
Yep. And I think this is important because remember back when Procedurally Taxing, that really cool blog was posting articles about what the stimulus program, the recovery rebate program looked in 2008. One of the things that one of the LITC people talked about, that's Low Income Tax Clinic, was that they had to do a lot of transcript retrieval for their clients that year because most people had no idea that the money hit their account and was gone so quickly for paying rent or utilities in 2007, 2008, that they barely even registered it. And so that there wasn't a very clear way for tax pros to get that information. So if they could give us a tool like the one John is suggesting, I think that would be wonderful.
I would imagine there will almost definitely be the tool.
You're very hopeful, Fred.
I mean, at a minimum, otherwise, how many phone calls are there going to be from DIY people? They're simply, yo, how much was my payment? I can't remember.
Maybe they'll keep up, get my payment, and they'll change it to help me remember my payment. All right.
Let me throw up a polling question because, you know, we do have that up. This is about the time that all these folks at home that know more about the CE rules than I do start pinging me on Facebook. Yo, you forgot a polling question.
Mark didn't say anything yet. We usually wait for him, I thought.
All right. So this poll is up.
So I guess we need to add this link for check your payment on the website, Hunter Ellie.
Yeah. So I was telling the guys earlier, I have not seen many of the early Bill Murray films. I have seen Caddyshack.
You haven't seen Stripes, it doesn't count.
I haven't seen Groundhog Day. So I grabbed some of these quotes and images from the internet. I really hope the context works. I have seen Ghostbusters because obviously.
I need to get out more because everybody's an EA. 2 attorneys, lots of EAs, and 5 people that are just visiting, which I think is kind of interesting. Just visiting. I need one more, more than one. I need 10 more of you to vote.
I have not seen Groundhog Day.
What?
Yep, someone was saying.
That one might have actually been filmed after you were born. Okay, I'm going to close up in 5, 4, 3, 2, 1. Thank you for playing. Okay, on with the program.
Okay. Mark Hull, you posted like the same 5 things over and over again. So moving on. So IRS has formed partnerships to release EIP information in a variety of languages. Frank Augustino and his low-income tax clinic volunteers also transferred flyers into 40 languages, and we've posted the link there. And IRS really wanted to put forward the fact that their Spanish promotional materials are now available. And IRS has formed partnerships in particular with the FDIC, which is the bank people. So they will help you get a bank account so you can do something with your EIP. And then the Consumer Financial Protection Bureau has videos on EIP and other COVID-19 financial information. That's probably really useful so that you can, I think it's probably really useful for identity theft because they also have a bunch of really great links for identity theft, and they also have free webinars. They also have free materials that you can order for your office on financial identity theft. I think that's going to be a big problem. What happened actually in my neighborhood, the Liberty Tax down the street from us was robbed last night, broken into and robbed. So I think, putting identity theft information out there is probably really important. And that's just random. Sick transit, Gloria. Maybe we'll meet again when the fighting stops. So the IRS is slowly reopening. The Washington Post had a really nice article about this yesterday. They have about 3,000 workers who have voluntarily offered to return. That's very small when you consider their actual employee numbers are 77,000. What's going on is they have so much paper now, like they're storing it in trailers. Austin alone has said that they have about 250,000 pieces of paper that are requests for ITIN numbers. So one of the things that ITIN employees and the National Treasury Employee Union is worried about is the security of the paper, because you don't want that to be stolen. And they're also concerned about how long it's going to take to process it, because not only are the employees going to need to work through the backlog, they're also going to need to answer a bunch of calls now. And Commissioner Rettig has said workers must return to work starting June 1st in order of reverse seniority. I don't know what that means, so I'm assuming that means the lower paid workers are going to go to work first.
Newbies. No, remember, the IRS is unionized, so the folks with the least seniority.
And they did say that they are working on getting masks. They got a contract to get masks and gloves in for the workers. So, this is a quote from Caddyshack, the Well We're Waiting. PPS and ACS are open with limited staffing. I know a lot of people haven't been able to get through. I was actually able to get through on Monday and request transcripts to go into my secure object repository through e-services. But I imagine certain days like today, which is a Friday before a holiday, they're not able to get through. You can get PPS is also saying they can't forward power of attorneys to CAF right now. So if you have a client who has signed a power of attorney, like within March, obviously CAF is closed. They can't process it. Neither Ogden nor Memphis are open right now for processing things. John, I'm assuming Philadelphia is closed for processing CAF.
I don't know. Apparently, Philadelphia never closed.
Oh,
so you can still call. I thought you could still call the international unit. So
okay. So, I attended a webinar on Wednesday with a guy who says that PPS is not able to forward your POA. So if you have a recent client, call, fax them the POA. There's a lot of free or low cost e-fax services online right now. But they won't forward it to the CAF unit. So when CAF is open again, you're going to have to resend it if there's more work that needs to be done. Now, one of the main divisions that IRS wants to open is the wage and income division. Those are the people who process, problems with W-2s, who process income transcripts. They're also the ones that you have to call if you have an identity theft verification issue. So if they send you a letter saying verify your identity, they do have an automated phone number, but apparently it's not very useful. Remember, taxpayers have until July 15th to verify their identification before the return is marked closed and their position denied. There is a new number under the People First initiative to fax a request for a release of levy. So if you do not have an RO, a revenue officer assigned, or if your RO has not contacted you and you need to get a levy released, send your fax to this number. They are monitoring it. Not like CAF, where I guess they just turned the fax machines off because they had too many. So one of the things we learned yesterday is that IRS national forums are closed. For those of you who don't know, IRS holds, I think, 5 forums in 5 different U.S. cities in the summer. Is that right, John? 5 or 4? 5.
Sounds like 5, yep.
So this year they decided they're going to close them for face-to-face learning and that they're going to hold them virtually between July 21st and August 20th. The first one was actually going to be held at the end of June, so they've pushed it back in order, I think, to figure out how they're going to do the virtual learning. They're going to live stream their webinars on Tuesday, Wednesday, and Thursday. More info coming in June. The price is $250 until mid-June, and then it's going to go to $290. And then a lot of other groups are providing virtual CEs throughout the summer. I believe a lot of chapters for NATP and NAEA are looking into it. So this is a good time to, work with your local independently owned CE provider, kind of like how we're all supporting our local businesses.
Buy local, baby.
And then one of the things we did want to know is that Missouri, the NAE chapter of Missouri, MOSA, is still live and that their ticketing just opened. So if you want to do a face-to-face and Missouri seems attractive to you in June, you could go there. And our very own Kathy Morgan will be presenting. I imagine Missouri is hot in June.
They have a beautiful spot by the lake. I can't think of the name of the venue. Let me throw up the second polling question. Let me hit up the second polling question, please. What?
I think it would be nice to go to a spot by a lake.
I wonder if I have something screwy going on here with the questions. What question are you guys seeing?
Something about the EIP card. Okay. Which of the following is not true of taxpayers who receive an EIP card?
Yeah, it's amazing because that appears to be full.
Camden on the Lake. Thank you, Christine.
And it can't be any hotter than, Vegas in August. So,
but Vegas is a dry heat. Oh. When I was at NTPI 2 years ago, like when we walked out of where were we staying? The Cosmopolitan. Walking out of that was like walking into an oven. Like you could just feel your skin cracking with the heat.
That's why the casinos are all in Vegas. They don't want you to walk outside.
They make it very difficult. They offered lovely cosmopolitans at the Cosmo. They had great pools that were shaded. It would be shameful if a hotel called the Cosmopolitan made a poor Cosmopolitan.
I need 20 more people to vote so we can close this up and move on, please. You do need there would look like there were 2 polls up for me. If you did not answer which of the following is not true of taxpayers who receive an EIP card, please answer it. Please.
That was the third poll, John.
But they were both open is the problem. So I don't know what I did wrong.
First poll was designation. Second poll was...
Yeah, but both of these polls were getting answers is my point. They were both open.
Weird.
Yep. I think the problem is I didn't clear the previous questions before the room opened. So I think we've got a little bit of screwy stuff going on. So I do need you to answer this. This is the second polling question, please.
Which of the following is not true of taxpayers who receive an EIP card? It's a trick question. And 44% of you have gotten it correct.
You want to discuss this real quick? We're waiting on 4 people. So, Ellie, why don't you give them the answer?
Yeah, the answer is married taxpayers will receive 2 cards. That is the correct answer in this. It's not true. So taxpayers do not have a choice in getting the card. They can't go somewhere and say, hey, I want a card. If they didn't get direct deposit, they're going to get a stimulus check unless their tax return was filed in Andover or Austin and IRS doesn't have their bank details. They have to meet those 2 conditions in order to get a stimulus debit card. I must not have been clear on that. So in order to get a stimulus debit card filed in Andover or Austin, no banking information on file. You can't choose it.
Okay, I'm going to close that up. And I think I know what I did wrong. I think I hit new poll instead of closed poll last time. So bad, John. Sorry about that, folks. Sorry about the confusion.
Bad, John.
Oh, and while we were talking, IRS just released state-by-state economic income payment figures. It's in your emails if you subscribe to your email, so you can see how many EIP payments went to your particular state. If you like that stuff, someone could make a graph. All right, so we have moved on to Esteban Was Eaten, which is from my favorite movie. 5 points to your house if you can guess what it is. IRS released a notice 2020-29. They're relaxing the rules for FSAs. So typically elections under a cafeteria section 125 plan must be made before the end of the year. So typically what happens is if you have an employer who offers you this late October, early November, they go, here are your options, and you must submit it to them before 12/31. When I worked at a university and we had these, I had to give it to them before December 15th because then everybody went on vacation. So many taxpayers often think about things like increasing their deductions, their withdrawals into a Section 125 plan so that they can put money toward day camps, summer camps, additional medical spending. Right now, however, employees may not meet their standards. They may not be spending money. So, for example, I know that we had my son signed up for 2 summer camps, and both of those have been canceled. So
I thought you were sending them to me.
You can have them.
I thought he was going to camp from home.
You know, one of my camps offered to do virtual camp from home. I just think it's really hard to get a bunch of 6 to 7-year-olds to sit in front of a computer screen for an hour. They're not doing like Minecraft or whatever younger kids like to do. So IRS has said, based on these conditions, we're going to allow people to make mid-year election changes. So what does that mean? In your employer-sponsored health coverage, you have 3 options. You can make a new election on a prospective basis if you initially declined your employer-sponsored health employer-sponsored healthcare. So Fred said to me last year, Ellie, you can participate in our healthcare plan. And I said, no. What I can go to him now is say, hey, I've changed my mind. May I participate in your healthcare plan?
No.
Plan administrators do have the ability to say no, by the way. You can also revoke an existing election and make a new election to enroll in a different healthcare plan. So if you had one plan that was really kind of shoddy, but you think you're going to need a better plan, you can go to your plan administrator to say, hey, I want to level up or I want to level down. You can also revoke an existing election based on prospective basis. So I could go to Fred and say, I want to check out of your plan. I think it's lame. However, that must be written. And I believe we included notice 2033 in here. We didn't. It might be in the links document that's there. They actually provide a sample. Yes, in the Word document and the handouts that says webinar links, there's a link to the actual notice. They have a sample of what they want that written notice to look like. So if you have an employee who's interested in it, or an employer comes to you with that, one of your clients, make sure they see that sample so that they can keep it on file. Clients can also revoke an election, make a new election, or increase or decrease an existing election to their health FSA. And this is one of my favorite quotes. Wait, do you smell? Stop. Do you smell that? No, it's listen. Do you smell that? Gosh darn it. Listen, do you smell that? So in this case, Ernie decides to increase his Ghostbuster FSA contribution. That's probably very smart for Ernie, given what they go through every day there. You can also revoke an election, make a new election, or decrease or increase your election regarding your dependent care assistance program. So Steve Zissou can decrease his dependent care benefit because Kingsley will not be attending summer camp. So again, with me, I could decrease what was coming out because I won't be sending my child to summer camp. And I think that's actually a really good benefit because that means that people will have larger paychecks to go home. Your plan administrator may be happy with it because it's less for them to monitor, and it gives taxpayers more flexibility over their plans.
Ellie, let me just get a third polling question in here real quick.
Oh.
Or the fourth or the fifth, depending.
Well, this is officially the third question. IRS release 2020-55 did not say the EIP isn't taxable. The IRS will be releasing a lookup tool for tax pros. There are updated addresses to return decedent checks. Parents who receive $500 for the wrong year can keep it. Ellie, would you look at a couple of the questions that are in chat? There's a question about 125 plans. Do they need to file an amendment? And I think the answer to that is no.
No.
Right? It's automatic, these changes?
You just have to talk to your plan administrator.
In other words, me, the employee at firm XYZ, has to talk to the person at XYZ who's in charge. Got it.
Yeah. So like I would go to Fred if he were my plan administrator to say, hey, I need to reduce the amount of money coming out for my dependent care benefits. And then Michael Rapoli, I think we're seeing a lot of refunds being delayed right now. It's typically for people, from what I have heard, it is typically for people with a lot of credits on their return because there's no one for IRS to really look at those credits. I have heard, particularly from California EAs and CPAs, that people who claimed energy efficient credits have not received their refunds yet.
At all, or in the last month?
In the last 2 months.
2 months. Wow.
And I think part of it is maybe because that credit was brought back for 2018, 2019. So you would normally have it being looked at more carefully, and it's not because no one's there. That Washington Post article said that IRS, because of how old the programming language is, isn't set up for telework in a way that, for example, a lot of us are as tax pros.
I think a lot of the back end stuff is written in COBOL. common-oriented business operating language, which was old in 1990 when I went to college. So,
and Michael, the advocate's office cannot check right now because normally who they would check in with is an IRS employee, and no one is there yet. But remember, Reading wants people to start coming back June 1st. So we might start seeing refunds being pushed through in June.
You also may see, this is just speculation, you might just see them pay it now, audit it later, and I could see them sending out just saying, screw it, we're too far behind, refunding the money, and then later this year or next summer start a project on it and send out a notice that says, we see you took an energy credit and you meet the criteria that maybe you made the numbers up. Please send us the following paperwork. Just a thought.
So Robert asked if EIP went to an unrecognized bank account, is there anything a client can do? They could call the EIP line. Typically, what happens is if a payment or a refund goes to an incorrect bank account, like it doesn't have the taxpayer's name on it, the bank is supposed to reject and send it back to the IRS. And in that case, you would get a check.
Hey, let's close up the poll. The answer here and the responses were across the board. Most folks got it right. The IRS has not said they're going to release a lookup tool, although we would really like it. They did confirm that EIP is not taxable. They did revise the addresses of where to return both decedent checks and checks for incarcerated folks. And parents who received the $500 for the wrong year, I claim my son this year, not next year, so I got the credit. I can keep that money, and then next year my ex-spouse will, of course, get that extra $500 when they true up. Hey, here's an interesting thing, Ellie. Michael Cohen was not in jail, and he was released so he doesn't spread COVID-19, and he's now at home. If he gets his check now that he's at home, right, does home confinement count as being incarcerated?
Ooh.
I
would think it would.
I don't know the
Law,
answer.
it probably does, right? But isn't that interesting? More importantly, will he get the true up at the end of the year because he's at home?
I'm wondering if Michael Cohen made less money in order to get it. I mean,
well, in 2020, he probably will. Yeah, I don't know. Actually, in 19, did he make any money? When did they arrest him?
He only spent a little bit of time in jail.
Yeah.
Because I remember last year around this in March, I told Fred I wasn't going to work that day because I was going to watch his testimony.
Yeah, so it's possible he did not make any money, or enough money that he got.
I'm sure he has a lot of passive income
or offshore income. The accounts they didn't find.
Well, he's also married, so we don't know what his wife does either.
Okay, onward.
Okay. So the grace period in order to be able to move this stuff is actually the end of the year. So you don't have to make a decision on this stuff now. And ladies, remember that the CARES Act says you can now use your FSA for menstrual care products. I actually went and checked on a couple of period underwear websites to see if they were set up for it, because a week after CARES came out, a lot of the FSAs hadn't adjusted yet, and websites like Thinks now say that you can use your FSA to pay them. You just might want to check with your administrator first, and that works because each one of those is like $70. And remember, it's retroactive to July 1st. So ladies, if you or someone in your family had an FSA and they bought something, they bought tampons, pads, they can submit those receipts to their FSA for reimbursement. And then the grace period for this is also for unused dependent care benefits. And then those purchases that you use are, again, retroactive back to January. And then your telehealth expenses are also retroactive back through January. So if you used your HSA, if you paid out of pocket for a telehealth appointment in February, you can go ahead and submit the receipt to your HSA or FSA and get that reimbursed. And I know I actually had a doctor's appointment for my son via telehealth this morning, and many Many of doctors' offices are trying to go that way for a very long period of time. So that's useful because then you don't have to, give a debit card there. Also, 2020-33 modified a previous notice, 2013-71. It used to be that you could roll over $500 from your unused health FSA into the next year. They have increased that to $550 because of inflation. There's no real instructions for that. They'll roll it over for you automatically. Just make sure you're below the $550. And there is no Dana, only Zool. And then 2020-33 also allows health plans to reimburse individual insurance policy premium expenses incurred before the beginning of the plan year. So what the thinking behind that was, and I went in and read the notice, was that a lot of times employees may be expected to make the January premium payment in December. If you're not reimbursed your HSA and your employer can go ahead and do that. And then they have increased the rates for HSA for 2021. It's now $3,600 for the self-only plan. And then it's $7,200 for family coverage. All right. So, hey, y'all, remember back in the day, Tax Cuts and Jobs Act said, you cannot deduct expenses related to fines and penalties. So, if Carl Spackler is fined $100 for using unsanctioned methods to get rid of gophers, he cannot write that $100 off on his tax return. Basically, it applied to settlement agreements paid to or at the direction of the government in relation to the violation of a law. So if Carl paid $100 to the municipality that controlled the golf course, the government would have to tell IRS, hey, we got $100 from this dude, but Carl couldn't deduct it. Well, IRS released some proposed regulations on that. What they said was that if the fine was in relation to getting your building or business into compliance, you can write it off. The taxpayer has the burden of proving that that expense was paid or incurred with the purpose. So Ghostbusters Inc. was fined for violating EPA rules. They did not follow proper waste disposal rules. So they paid $10,000 to come into compliance. Because this was done in result to an EPA fine and in order to meet EPA guidelines, they can deduct this income under this regulation. IRS has opened comments on this until July 13th. And if you want to comment on it, there's the regulation 10459-1-18. So I put the bad guy here from Ghostbusters as the EPA joke. No one's laughing. We just have a few representation members to get
the Murray theme program is fabulous, so I'm laughing.
Inside. So as a reminder, IRS sent out a bunch of emails over the past 2 weeks reminding people of what they will and won't do. And actually, I saw a lot of these questions in some of the Facebook groups. Existing installment agreement payments due between April 1st and 7/15th are delayed. Interest will accrue. So that's going to happen no matter what. Again, I think we reported last time that some banks were penalizing taxpayers who had an existing DDIA for calling the bank and saying do not allow them to take it out. So that is something your client should be aware of. Taxpayers still have until July 15th to submit additional information on pending offer and compromise apps. The agency won't close the application before then without the taxpayer consent. So they have some time. However, offer and compromise payments can be deferred until July 15th, but interest will accrue. However, and this is very different than the mortgage thing, missed payments are due and suspension payments end. If your client does not make, for example, their May and June OIC payment, in July, both those payments are due with the July payment. So what I mean by the mortgage thing is that CARES Act said that people could defer their mortgage payments. And what the bill specifically said is that it's not going to be a balloon payment. So when it ends in September, mortgage owners weren't suddenly going to owe all that missed payment. It was just going to be added on at the end of their term. OICs are different. It's going to be added on as a balloon payment. People need to be ready for that if they're not going to make their payments. If you have clients in offer and compromise, I would encourage them to make the payments as much as possible so they're not hit in July and August with those bigger payments. IRS did say, though, that they're not going to default any OICs for taxpayers being delinquent in their 18 and 19 returns right now, but they do need to file them by July 15th of this year. So if you've got OIC people, start harassing them politely. And the refund statute, we've said this a dozen times before, but I just want to remind, refund statute for 2020 expires July 15th. IRS has said that more than 1 million households haven't filed yet, so that's refunds out there that aren't claimed. Revenue officers may actually still reach out to taxpayers. However, they cannot do any enforcement activity until after 7/15. IRS wanted to remind people that they're delaying automated levies and liens. I don't know anybody who has received an updated notice on a levy or a lien. However, what's nice is that ACS is open. So you can call ACS and work things out with them. They can take your POA by the phone. You can fax it to them. So if you sent it back to CAF in February and it's not posted yet, you can work toward it.
That would have been a neat polling question. Who's seen any of the IRS automated memos, notices in like the last month? About a month ago, their 3-week, 4-week lead time died. Maybe nobody's there to put paper in the equipment, but it's pretty amazing. They pump out 1 million notices a week, 1 million pieces of mail a week in the automated system, and they've stopped. So it's pretty interesting.
That's a lot of notices that are coming out when they get back.
Well, or what are they going to do? I mean, they're going to be now, it's like when the government shuts down, they're going to be like 2 months behind, not forever. I mean, at some point, they're going to just skip people or skip to get caught up. I want to say we're at 50 minutes, Ellie. Let me post the fourth polling question. So for those of you that have been here since the beginning and only want this part or only want the IRS CE, you've been here 51 minutes. You can answer the question and call it a day, but we hope you're going to stay. Nobody's answering. Which of the following is not true about July 15th? FBARs, the FinCEN 114 is due. OIC payments can be deferred until July 15th. Q1 and Q2 1040 estimated payments are due July 15th. Existing installment agreement payments are delayed to July 15th. One of these is not like the other. One of these is wrong.
I knew the answer to that one.
And for those of you at home that need a laugh, about 5 minutes before we started today, I said, hey, who's got the polling questions so I can load them? And the answer was nobody. So as much work and effort as goes into all of these things, sometimes we slip a little bit.
Yeah, I noticed at one point I wrote uncured instead of incured. It's
like bacon or ham.
Bacon. The other thing too that I've noticed is that I wrote this PowerPoint in Wes Anderson fonts, which is Futura and Tilde, and it looks like when you guys opened it on your end, the fonts didn't translate. So that is probably why some of them are being cut off at the bottom.
Well, for what it's worth, what you're seeing on the screen is what I'm seeing in PowerPoint on my local machine.
I think you might have to install Futura, which is really sad because it is a really beautiful font. It's very clear.
Futura isn't a font. It was a planet in Stargate Universe.
I don't think I've seen that episode.
You even see Stargate Universe?
I've seen Stargate SG-1.
No.
It ended way too early. SGU was good. I like that.
This was the third series and about midway through the second year, Common Descent. Anyway, it's a good episode.
You even know the episode name?
Yeah, it's a time travel.
You're a geek.
What can I tell you? 1969 and 2010 are my favorite episodes in Stargate SG-1. Why? Time travel episodes. Anyway.
So this is the point where we're going to do a few questions, and we're going to be transitioning to the PPP forgiveness for people who are interested in that.
And we're also going to have a PPP break as well.
Yes, one of the polling questions that isn't here is, since Fred's going to be taking the lead on this portion, should he be drinking wine, tequila, or beer?
No. Whiskey or beer. Or
Why
nothing.
not wine?
Or wine. That's Leah's stuff. But they can decide in the questions and the chat and let me know what I should be drinking.
Jennifer, I have no idea what they're talking about either. It's stuff.
Okay, so you guys are we're on the 2-minute break unless there are other questions popping up.
I don't see any questions in the Q&A.
All I see is whiskey.
I guess I'll be drinking whiskey.
Someone said wine.
And beer.
I see lots of whiskey. Bourbon. Yeah, I got bourbon.
I've got whippersnapper whiskey.
Jennifer, I did not see your comment on the Ogden IRS employees. Could you copy paste? Oh, here it is. Talking to clients that work in the Ogden facility, they said they're still working through the paperwork from the last shutdown. Yep.
From the last shutdown.
I'm not surprised. We talked about that in one of our CARES Act updates. We talked about the fact that they're probably inundated from paperwork from last time because their budget keeps getting cut and their staff keeps getting cut. And one of the things that the Washington Post article pointed out was the fact that something like about half of their workforce is over 50.
What does that mean?
That many of them are on track for retirement, and some people are taking early retirement.
I was just checking that over 50 comment.
And then one of the things, too, is that I know IRS right now, the replacement rate for an employee is 1 in 5. So for every 5 employees, they're only able to replace them with 1 under their current hiring regime.
I thought Reddit gave them a whole bunch of money so that they could actually bring in enough people.
I think the money was primarily designed for the PPP and the 1040 line, because one of the biggest complaints is, and the loudest and the one that senators and Congress people respond to, is that people can't get a hold of CSRs.
Got it. Oh, that's right. They got specific money for phones, right? Phone employees. Okay.
I am waiting for...
I don't see any other questions.
Is this the actual break we're taking, or we're taking a 2-minute break?
You're on the 2-minute break, Fred, because we were polling for questions. We're not seeing any comments.
If you're 50, you're young.
Johnny, he looks like he's about 30. Really?
Is an AARP membership worth it? That is outside the scope of this webinar.
There we go. We got it delivered.
I gave my daughter a AAA card because it was free for minors, and she said, "Why would I ever need this?"
Love you. What is Apple Crown? Oh, it's
Wait,
not
is this me? Do I need to run and go get my bourbon?
Yes, I think you should.
Okay.
And it is not whippersnapper. I am drinking Apple Crown, it appears. So are we carrying on, or what are we doing here, John?
I think it's time to roll. There's no question.
Let's go.
Oh, wait. There's a couple of quick questions.
Okay, while you're doing the question, I'm going to be right back.
There's a couple of comments about the handout. There's only one handout in there. Maybe you didn't print all the pages. Susan's asking, any news on the July 15th deadline being moved? No, right?
No.
In fact, that's even dead. It didn't even make. Remember, there's two laws we're going to talk about. There's the pending. What was the name of the bill? The $3 trillion bill that Pelosi pushed through.
The Heroes Bill.
Heroes Bill. Heroes Bill didn't even mention it. and she had everything, including marijuana banking, thrown in there. And we have another bill, the Paycheck Flexibility Act, which we're going to talk about today. And I don't remember seeing that in there either. But then again, it doesn't need to be in the bill because the Treasury Secretary apparently can just send out a tweet.
Glenn, I think that 1040Xs right now are going to be 12 to 16 weeks once they open up, and I imagine the 16 weeks.
But wait, let me add something to that, and we should have put a slide in there. So those
the beta.
Those of you that know Knox Wimberly, our friend, Knox mentioned on Facebook the other day that a 1040X beta was coming out where we'd be able to e-file likely some of the more simple, less involved 1040X forms. And that's going to be super cool. Someone said, what's your authority for that? Knox is on a number of these steering committees, from his relationships at Happy Tax. He's on some of these IRS committees where they're both sharing information and trying to get practitioner input. And that came out of a committee. It was something he could share. So I think that's fabulous. So Glenn, to answer your question, if you've got simple stuff like I missed a
W-2
or a 1099-R and I don't have refundable credits, I bet you those are the exact returns that are going to be eligible for e-file.
Susan Brown Otto brought up a point, and AICPA, I think, still has their chart available. Not all of the states are following the 7/15 date for estimated tax payments. So like New York and New Jersey, your second quarter is still due June 15th. So make sure to check with your state. Don't just treat July 15th as a blanket for everything. I know Tiani had me checking a couple weeks ago, and we had something like 10 states that were not following the July 15th deadline.
Glenn, I think, yes, the child who went and claimed himself, that's a good example. I can't say for certain, but these simple automated things that don't require a human review, I bet. Susan is also asking, why can't we e-file an MFS tax return if the spouse doesn't have a TIN? Of course you can. You need to use either foreign U.S. or applied. And at least in Drake, you hit Control F to force the field. If you're using ultra expensive, I don't know which is what I think you're using. I don't know how to do it. Fred or Ellie, you use ultra expensive. Do you know?
We were able to file an MFS return without a taxpayer's TIN. I think there's a button you have to mark.
Button on some of the software. Yeah.
Checkbox, a button. We make Tiani do all that work.
So we don't let Tiani do taxes.
So I love Drake. So I'm going to say, even if Drake does it, everybody should be doing it. So Drake is doing it.
Rondi, for the RMDs, I believe it was 60 days they have to roll it back into something if they took the RMD. Ms. Lindquist, Mr. Lindquist, I'm so sorry. So it's 60 days they have to roll it into something.
And Phyllis reminds us there is a checkbox in ultra expensive, but Susan said she's using Pro Series. So,
what was that?
Alex, my husband's coworkers tested positive for COVID-19, and we just got his result back, and it's negative.
So he didn't test positive.
Woo! Clean.
Cheers. Everybody drink.
All right.
Are we ready to move on?
To PPP.
All right.
Rock and roll.
This is a primer. That means it's not comprehensive. The goal is to cover the concepts.
Yes. And before we do the PPP, a quick PSA as well. Coming up July 15th for the healthcare penalty we had. If you aren't doing a protective claim, you need to Google that and look into doing that for your 2016 people who paid the penalty. Okay. So these are the objectives. We're going to review our key definitions, review the application for forgiveness. We're going to go over the caveats. We're going to walk through some forgiveness application samples. Please save your questions for the end. We're going to answer them all, and we'll stay on as long as possible. And remember, this is all going to change Monday, and what we tell you tonight means nothing.
So one thing, to be fair, as Fred just alluded to, there is legislation that was passed in the House or just introduced. The flexibility.
I think it was passed.
It's passed. So there's a possibility that all of this is correct. Is going to be legally changed, not even administratively, but by law.
Yes. Yay. Okay. Key definitions on payroll. All right. What constitutes payroll? And I'm assuming everybody's gone through a couple of these seminars and other seminars and have read on your own. So this really should all be familiar to you. We have salary, wage, vacation, parental, family, medical or sick leave, plus health benefits. If you have any other credits, or you cannot use the wages for both. So if you get any FFCRA, which I believe is we've labeled the extended family leave credits, you cannot use them also for PPP. I believe in previous webinars, and it was then corrected, we stated that you can get the employee retention credit up until you got your PPP. That is not the case. If you get the PPP loan at any time, you cannot get the employee retention credit at all. All right. Bonuses, we believe they are okay. You may need to justify them. We all have that $100,000 annualized limit for wages. So if you're an employee who makes over $100,000 automatically and your weekly or biweekly wages flow into that, well, then getting a bonus for that person isn't going to work. It's only going to work if you give bonuses to people less than $100,000. Most of us are tax people. If we have employees, I'm going to assume that we waited until we got our PPP to hand out those annual bonuses to our staff. Okay. No guidance yet on our self-employed healthcare and or retirement. We cannot use healthcare and or retirement for the owners or to offset the PPP as well. All right. So when we look at an 8-week period, and we did not fix that space, but that's okay. That comes out to $15,385, which is the 100K divided by 52 times the 8. So that is our added for the benefits. Dave, as long as you don't use them for the same thing, yes, you can do that. Young Bill Murray, making a miracle happen. Frank Cross's Corp, Scrooge Inc., took out a PPP loan for his S Corporation where he's the sole employee. All right. Box 1 of the W-2 was $88,400, calculated as $80,000 in wages, $8,400 in health insurance, and he had retirement contributions of $3,000. What might his payroll forgiveness look like? Okay. For PPP loan for his payroll, only his payroll, not including other items. $12,308 is his maximum salary he can take. Add his health insurance and the retirement contributions. Okay. I'm pretty positive that we don't get the retirement and health contributions for the owners of the S Corp. Is that correct, John?
For what? For the loan or
for forgiveness? For the forgiveness, I believe.
I think you do. You certainly do. I think you do.
I'm looking at Nitty's article, and it says because healthcare and retirement costs attributable to the owners, general partners are not forgivable. I don't like to dispute Mr. Nitty.
Well, but he's also not authority, so we can look that up.
So take this with a grain of salt, people. We prior to reading Nitty, we had believed this was, so we are going to have to double check this, and then we'll talk about it. Bookkeeping suggestions. Keep in mind, these are only suggestions. You need to do what's right for you and your clients. All right. The PP loan is a loan. It is not income yet. It is nothing. It is not forgivable income yet. It is a loan. So book it as a loan. As you spend money from the PPP, you can then transfer it. You know, if you have it in a separate bank account, which many people are suggesting, some are commingling it. I believe the main focus is your ability to track what you spend with it. So we're going to go with the separate bank account philosophy here. And then as you pay your payrolls and you pay your rent and your other items, transfer that money from the PPP account into your operating account. All right. What we're doing is going to create an expense line with subcategories. So we're going to put that all in one spot, so it's all in the same spot. Once the loan is forgiven, you can adjust your liability to reflect what is left and what you may need to pay back. And again, how all this stuff is going to become impacted come tax time, I guarantee you it's all going to change.
Fred, Dave Yoshida had a really good question, and I think you may be able to tie it into bookkeeping. If he pays an employee $100 for payroll and then $300 for FFCRA sick leave, can he use the $100 for PPP?
Absolutely. You just cannot use the same wages twice. We are not allowed to double dip. The only possible double dipping we are going to get is if both the loan is forgiven and the expenses are allowed. Right now, we're not allowed. We're hoping that changes.
And I think that would just mean very conscientious, very thorough bookkeeping. The last big notes here, when it comes to tax season and, you have people who do their own books, did they track things out of their PPP correctly?
And for those that have bookkeeping engagements, you need to address this and talk to them and let them know that, this isn't part of the normal annual engagement and there's going to be additional costs for this.
This also goes back to, if you want to talk about Nitty, he was the first guy to suggest it, this concept of getting a separate bank account. And, everybody harps on, does it matter? Will it matter? I'm afraid that the person who's going to look at your account is a 22-year-old at his first real job, working from home off a checklist with no flexibility. And then you give him worksheets that say, here's how much I took in, here's what's FFCRA, here's what I got this for, and here's what I used EIDL money for, but I still meet the whole thing, and it's not going to get approved because the guy doesn't understand it. He has no support. He has nobody in the cube next to him. And just like with the loans, how many of us had to call with these loans and didn't get an answer, right? You couldn't get to a person, depending on the size of the financial institution. And that's the concern, since right now the financial institutions are the ones that need to make the determination that if you get forgiveness or not. So yes, Fred, people need really good books and records, and we need to be thinking about how this fictional 22-year-old is going to perceive it and how we're going to explain it to them.
Right. And going back to Dave's question, when you're doing payroll, if they are getting that FFCRA payment, that should be a separate line item on your payroll register. Okay, so just like, you have regular wages, FFCRA wages, and that's how you're going to track it and prove to them what you did. And then you can trace that to the credit you got, and you can trace the other $100 to the PPP loan as well. Ellie, what does the FFCRA actually state? It's
Families First Corona Response Act. It set up the family, the sick paid leave and the family credit leave. You can get credits for paying your employees if they are out for certain days. Same for sick leave for COVID-19. If you have an employee who can't come to work and can't telework because they're caring for a child or a sick person, there are credits. They are limited. The CARES Act webinars are on the Tax Practice Po YouTube. Discuss that, I think, in my individual one, and I think in your business one.
Yes. And basically, if one of your employees contracts the corona, as Ellie said over there, if the employer still pays them, the government's going to reimburse you the money you pay to them, subject to certain limitations, but mostly almost full pay. So, all right. Tax season note, these expenses aren't deductible. All right. As Ellie said, clients are going to they're a mess when things are normal. They're going to be even more of a mess with this. And I'm assuming everybody else is getting the 3 million phone calls we are getting. All right. What are you going to charge? We don't know yet. Okay. Payroll items to note. We have both the paid or incurred scenario with the payroll. So based on current guidance, it's basically going to be a cash basis. There is a caveat for, I believe it's either biweekly or better, where if it occurs at the end of the item, you can include those costs if they are paid in the very next payroll cycle. You also include state and local taxes that are a factor of the wages, such as employment and local taxes on payroll. All those people that took S Corp distributions and they got the loans and did not take any payroll. Theoretically, there should be no forgiveness if the banks do things properly. And we're going to hope that they're going to do them properly. And so those S Corp distributions do not count. The other items that are not payroll, you can spend it all on payroll if you want. For our firm personally, I believe all of our loan will go towards payroll, and the other stuff is just going to be filler if we need it. If you don't spend at least 75% on payroll, all right, then the overall loan forgiveness is reduced. So that impacts the other 25% as well. So let's assume we had a $100,000 loan and we only spent $60,000 on payroll. We achieved not a full amount. So, we are not going to get full $100,000 forgiveness at all. It's going to be prorated.
Hey, Fred, can I stick in something here that I think is appropriate only because he's been so patient with the question?
Depends who it is.
Robert D. from Texas.
All right, he's a Texas boy. We'll let him.
All right. So, in regards to the PPP repayment, he's been watching all the SBA webinars. He should be watching ours, right? But they're saying you can't pay the owner more than you did in 2019 on an annualized basis.
I have not seen anything on that. I have seen somebody else say that. I'm going to go with I disagree with that right now. Right. Obviously, if they're more than $100,000, it doesn't matter.
I think we run into the issue, and this goes back to Mark Hull's original question, right? So when we talk about the $100,000 annualized, okay, that's my regular pay. But he had made a comment he wanted to pay a tax season bonus that he normally pays. Normally this time, he wanted to give somebody a $5,000 bonus. If I'm a weekly payroll, does that have to extrapolate into a $55,000 or $260,000 annual pay, and then it gets disregarded? Now that one is I haven't seen a clear answer, and I can argue it either way.
I believe when we look at the worksheet and for the employees that are not over $100,000, that it calculates the annualized pay and relates it that way based on what they were paid for all of those weeks. So I believe it will factor in.
Okay.
Somebody else also asked it about Schedule C people. Schedule C sole proprietors, basically their forgiveness is already calculated before we start. We take line 31 of last year, and that calculates both their loan and the forgiveness portion, unless they have employees and unless they have those other attributes, rent, interest, and utilities that are not office and home.
In the handouts, the document that's entitled Interim Final Rule has the explanation of how SBA and Treasury are going to be treating Schedule C forgiveness applications. It's either page 3 or page 4 of that PDF, and it's a full breakdown of how they want you to do it, what's included and what's not included. And it is your citation for why in-home office expenses that are on the 8829 don't count.
Correct. Kelly, in your case, you're going to have to do some calculations and discussions with the bank. And this is something that people should not be doing. And I have clients that do it too. Annual payrolls. All right. If you're taking annual payroll in December, one of the things that they were talking about was that you need to do things the same as you do each year. So theoretically, they could come back and say, you don't normally take payroll till December. These are things we're not sure about. We've recommended people take weekly payrolls, even if they took biweekly. Things that we've done in the past are going to impact things now. So for people with annual payrolls, you should do it at least quarterly or monthly. It's not that difficult to continue to do. All right. We've talked a lot about mortgage interest. All of these things have a February 15th, 2020 date. They must be in place prior to that, or you cannot use them for forgiveness. So interest. We believe it does not include other interest. Prior webinars of other people have talked that it's any interest. We believe it's just the mortgage interest. Rent must be a lease. These are the documents the bank's going to be asking for. They're going to want to see that lease. They're going to see something. Utilities, same thing, February 15th. Utilities are everything we believe it to be: gas, electric, phone, internet, water, and that confusing transportation. Nobody really knows what that transportation portion is. So we're going to get clarity on that. Look at that. My slide just went ahead. I didn't click anything. Undefined fully. Do they mean the gas and auto? Do they mean travel? We don't know. Coming to a theater near you soon. It is also extremely clear, and there have been many Facebook debates on this, about home offices. All right. If you have a Schedule C, an office and home, it is clear. I do not believe this is up for debate. It is not allowed to be utilized towards forgiveness. All right. What is kind of unclear is if you have an S Corp and then you have an accountable plan that you reimburse for some of these things for. At this stage, we're kind of saying yes, but I believe that's an unclear area as well.
Hey, Fred, let me add one thing here, though. Sometimes we don't think outside the box, or we don't think ahead. So I had a discussion with somebody else about internet access, and they said that was in their 8829 calculation. And I said, why? Because that is not something that is a function of the square footage of your apartment. It's a third, it's half, it's whatever. And it probably doesn't belong in there. And if it's not in there, of course, it can be used as part of the forgiveness calculation. So,
How do you justify the rest of the families using that, though?
I wouldn't let them deduct all of it.
Or just don't let the family use it.
Huh?
Don't let the family use it.
Well, I mean, I use it, to be honest with you, I use it as a tool to get my way by changing the Wi-Fi password. But that's a whole other story. You clean your room. No. Okay, no Wi-Fi.
There are 2 points in the chat that I think are really important. One is Henry and Linda said that the transportation was fuel for company-owned vehicles, which would make sense. And then the other one is that the interest on vehicles could be used for transportation. I saw that one. It was the University of Illinois Tax School. The guy said that interest on lease payments for company-owned vehicles could be counted toward forgiveness.
But he also said company-owned. That says to me, owned by, insured by, titled to.
Yeah.
Mm-hmm.
Right. Not. Oh, let's just put it on my S Corp, which we happen to see a lot of.
Exactly. Mr. Barfield, okay, that second phone line that is exclusive to the business, that's not an office and home expense. That's going to be a direct deduction on your Schedule C, sir.
100%. Agreed.
And you should know this case. Come on. All right. As of waiting, the self rental. Again, with the home office expenses, the Treasury used the term windfall, which is why we know it is not allowed. Do what you got to do to cover your butt, Bill. Okay. Right now, these expenses are not tax deductible. The IRS came in and properly applied their rulings to state that these expenses are not deductible. And the argument is that many of us believe that was not the intent of Congress. That's an argument I've had with many people. We believe that's going to change. I hope it does. If not, it's not a big deal. We're still getting a great deal. If he had that $14,208 forgiven, that's a deduction he couldn't take on his return. All right. We'll see what happens in the next week or two.
Hey, let me throw up a quick poll.
All righty.
What can I not include in loan forgiveness?
If anybody gets this wrong.
Well, since thank goodness, Fred, you're not answering it, I know you would intentionally answer it wrong.
I just did answer it.
Remember, you don't need to answer them correct. We'd like you to. You do need to answer.
We were at 100%. We're at 95% right now.
Every person in
90.
So June asked a good question. What about VPN deducting it just on your tax return and not 8829? I say, for me, I would just put it on my Schedule C because it's just on my computer. You don't have, my kid using VPN to log into his Roku or iPad or anything. Well, it's just so that I protect my RDS login.
Yes. Anything that is not a function of the square footage of the of the facility, the home, the apartment, does not belong in the 8829.
Janet, I would really be interested in seeing what William Pocan said for his citation, because 31 CFR, which is Code of Federal Regulations, which is an authority, has said that it does not count. So unless he has a direct line to SBA where SBA is deciding to walk that back, or maybe it's in the bill that the House is debating right now, that wouldn't make any sense. Now, if I, for example, as a Schedule C person who works in my home, I actually rent an outside office space to meet people, and I included that on my 2019 Schedule C, that's toward forgiveness if I still kept my rent, but not the home mortgage interest I pay for my 10% in home office use.
You know, let's remember too, there's a line in the SBA interim final rule where they talk about 850 seconds of the Schedule C, line 31, and I quote that the taxpayer should not get a windfall, and then they go on to talk about how their expenses of their home are expenses they'd be paying anyway out of the net income and blah, blah, blah. And it's intentional. The SBA intentionally went around the IRS and said, this is what we want to do.
Correct. And whenever you hear something from whoever it is, you need to take it from where it comes from. All right. If we're unsure of something, we're going to let you know we're unsure, and we're going to look it up. Some people are just going to take their beliefs and spit it out there.
Nina asks, can the 2019 Schedule C be filed be different from what the draft was that submitted for the PPP application? What we have heard is that the 2019 Schedule C final will be required as part of the PPP loan forgiveness. So that moves you into an ethical debate question. If your client wants to do one thing in order to maximize forgiveness, then come back and amend it.
Well, they could have submitted a draft. They didn't need to be filed.
The banks have indicated they're going to pull transcripts.
Yeah.
We're not going to give them a copy of the Schedule C for the bank until the e-file documents are signed. And then if someone comes back, just like with a bank loan with that nonsense, that all of a sudden your income doubles the year you're buying a house, and then you come back and say, oh no, now I want to amend it, I made a mistake. The answer is, I'm not amending it. So you have to have some hard discussions with people. That's my opinion.
Yes. Mark Hull asks if there's forgiveness cap on the health and retirement benefits for the sole shareholder of the S Corp. This is where we're not sure. I believe I agree with Mr. Nitty that it is not allowed to be deducted at all, because when we get to one of the worksheets, we're going to be a separate area for the owners of the corporation, and those other costs are not allowed to be accumulated there. So I believe, based on the application that's out and the guidance that Mr. Nitty puts out there, that the health insurance and the retirement benefits of the owners of the corporation are not allowed for forgiveness. We even said they are in here. It's unsure again, so we need to determine this. Okay, and this is, Ellie, isn't it what you said? 13 code CFR?
Yep.
Okay, so this is from your last year, from your 2019 Schedule C. They go by line 39. They do the calculations for the loan. Then they do the calculations, and you see that the forgiveness portion is less than the loan given. So this is what you get forgiven, that $46.12. So if you do not have rent, mortgage interest, utilities, whatever, that's your extent of your forgiveness. All right. So this further helps us agree with Mr. Nitty. If the Schedule C owner has a SEP, that's not included based on a current understanding. So if the Schedule C is like the S Corp shareholder, it makes sense that it's not allowed for the S Corps as well. With the Schedule C, if they have employees, same as with everything else, they get added in, and the calculations are the same. If they have the other expenses, use them. Once again, home office does not count. When you do the forgiveness, the 2019 tax return must be filed. Workforce reductions. This is where it gets all fun and complicated. And why are you shaking your head, Ellie?
This is where I was crying last night during math time.
So you're allowed to cry for webinars. You're just not allowed to cry for tax season.
Okay.
Okay, those are the rules. No crying, no dying, no lying.
We got no COVID-19 here. We scared it away.
And there is an excellent walkthrough of this entire application going line by Mr. Nitty. All right, so it's included on the links that Ellie gave you. So we're going through these quickly here. I would go through it line by line with Mr. Nitty and what he did. 2020 workforce during the 8-week period when compared to other periods. And there are different types of periods you compare these things to. We're going to be looking at wages for the first quarter 2020 compared to the covered period or the alternate covered period. We're going to be looking at FTEs from the February 15th of 2019 to the end, whatever the dates are, or various alternating dates as well. You're going to be allowed to calculate this in 3 or 4 different ways and utilize the best ratios that fit your situation. And then we're going to add to this certain safe harbors that you're allowed. So there are a lot of various ways that are going to allow you to get past the reduction in payroll, the reduction in FTEs, and hopefully they're all going to work out for you. All right. When you are paying people, all right, you cannot pay people 25% less during the covered period than during the first quarter of 2020. And that is on the application that we'll be looking at. All right. If people leave or you lay them off and now you're opening back up, you need to ask them to come back. Right? If they refuse to come back, that is one of the safe harbors. Right? Get this in writing. All right. Just earlier today, we told one of our bookkeepers it's ready for her to come back to the office. No more remote work. She responded she's not coming back. We have it in an email. We're covered. All right. You can rehire people even at a part-time rate. You are going to get a chance to true this up. If by June 30th, they're at their old rates, that's another safe harbor. So the goal is to get your FTEs back up either now or by June 30th, and then you'll be all set. Full-time equivalents, FTEs. A couple different ways to do your calculations for the FTEs. All right. 40 hours are what you use for calculating your FTEs. So if you have employees working 45, 50 hours and you're paying them overtime, you only count the 40 hours towards it. Okay. You get 1 FTE for 40 hours. 2 part-time employees at 20 hours a week. That's 1 FTE. Here are our base periods for the comparability aspect of it. February 15th of 19 to June 30th, 19, or the first 2 months of 2020. There is a simplified FTE calculation that you're allowed to use. Anybody who works 40 hours per week counts as 1 FTE. Anybody who works less than 40 hours a week is 0.5 FTEs. So if you have people that are working more than 30 hours a week or more than 20 hours a week, you're obviously going to want to go with the actual FTE calculation because it's going to be more. If you've got a bunch of people working 15 hours per week, then it's obviously that you want to use the 0.5 FTEs for them because it's going to get you a higher FTE number. Right.
Fred, let me hit a poll question while we're here, just so I can get caught up. A self-employed owner's comp is deemed to be 8/52 of their 2019 Schedule C net, the 2019 Schedule C net, 8 weeks of their 2020 pay, 2020 draws. Don't forget, we need to get an answer for this section to get the NASBA credit, 75% or 3 of the 4 polling questions. You don't need to get them right. We hope that you do.
Okay. And we're going to look at the people who will get these things wrong, and then we're going to strongly recommend that you jump into our Tax 101 series starting in June. Shameless plug there, right, Ellie?
That's right.
And we're not going to mention Mark's stuff later at all.
And Star Wars, I did one just in Star Wars for you, June.
I think we might need a Willy Wonka one.
Okay.
Actually, Gene Wilder would be a neat theme.
Yes.
I've seen many Gene Wilder movies.
And or a Johnny Depp theme, but Gene Wilder, I think, gives a lot more room.
Are we allowed to do a Blazing Saddles theme, or is that, not allowed to be done nowadays?
Can we do just a Mel Brooks theme, and we could do Robin Hood Men in Tights?
Spaceballs.
The answer is that, we're probably violating all sorts of fair use doctrine by doing this, but
it's nonprofit education.
Yes. Cheryl asks about employees who are normally at 35 hours and there are less than 40. They are 0.5. Under the technical rules, I think it is 0.5. You would probably use them.
That's the point of the alternative calculation, is that might get you a higher number.
But if they're 35, then you're going to want to go with the actual calculation, because 35 divided by 40 is higher than 0.5. It's going to depend what your other part-timers are. And remember, you're using the same numbers on the 2019 stuff compared to the 2020. So the FTEs are still going to be comparable for you.
Mark wants to know, if people work more than 40 hours, how do you calculate the FTE?
Who works more than 40 hours in tax season?
I would say 40 or more is 40, my man. You know how you do those calculations? It says, if your answer is greater than 1, write 1.
Yes. Pat, the class that we mentioned it's Tax 101. It's going to be both a refresher, and it's great for newer people, but I know a lot of experienced tax preparers are planning on going, because it is a great refresher. Everybody gets confused on filing statuses. We're going to do
head of household.
Head of household. We're going to do married filing separately in community property states, which isn't really a Tax 101. So they're going to be good for both the inexperienced and the experienced preparers. More shameless plugging. I love it.
Well, listen. How about Schedule C line by line? Just this mini discussion about 8829 and utilities suggests that maybe everybody could use a refresher.
And that's where I meant to do the shameless plug, because they should not have gotten that answer wrong.
All right.
Example. All right, we've talked about it. So we basically did this before. So we're not going to go over this slide right now. I'm going to skip to the next one. All right.
I thought Bench Accounting has done some really great forgiveness blogs, and I stole this from them.
Shameless thievery.
Printed it out as a PDF, and it's in the handout for easing. It's just different types of businesses. What will be forgiven? What will be forgiven? What supporting documents do we think that we'll need, and what the requirements are for forgiven? It's a nice review. You can also send it to your clients if they're asking questions and you don't want to type something up.
So, all right. Yes. And we have, in our past webinars, we have actually stolen from bench.com on a number of occasions. I was extremely surprised at how well written their stuff was. So, corporations are a not-for-profit for payroll. All right. The headings for these were not shown here. So, Ellie, tell me what the 3 headings are, please, dear.
The first column, the yellow column, is you applied to the PPP as. The next one is what will be forgiven. The third one is supporting documents. And the fourth one is requirements. The PDF that we provided is much clearer. I had to cut it in order to fit it on the
and we've gone over all of this stuff, so we're just putting this here in the slides. I'm going to let you guys read that. If you have questions, we're going to go over all of them at the end for these things. Okay, pause for questions. Oh, you fixed the S. So do we have questions? We have one here.
I guess, Marietta, my question would be, what other things under utilities are you curious about? Gas, electric, trash, internet, telephone. My feeling is, if you're willing to put it under utilities on a tax return and represent it to IRS as a utility, the bank's probably going to take it for the same thing. I'm trying to think of something weird that could be considered as a utility, and I got nothing. Maybe you guys got something.
Water delivery would be counted as a utility. I would track that. You're going to put in what you can put in, and the bank's going to say yay or nay, and you're not trying to defraud them if you honestly believe they might be able to be considered that. Laura, it doesn't matter when you pay them, as long as you pay the 75% towards payroll or 100% towards payroll during that 8-week covered or alternate covered period, you're going to be fine.
Susan, I would write up a lease agreement with your landlord and make sure it's backdated just so you have that evidence. I would also be prepared to provide copies of canceled checks going back into 2019 in order to prove that.
Ellie was kidding about backdating a document, I'm sure. Now, you're supposed to have had a lease. So this is the question about the self-rental?
No, she has a verbal agreement with somebody. And so it's never been written down.
You can get a statement stating that.
Yeah, that's what I meant. It's like have them say, starting on this date, we started this payment, not make a document and say that it was signed, January.
I would have something that says we have had a month-to-month agreement since I came here on this date, and we agree we would give each other X days notice, whatever it is.
Yes.
And at the bottom say, this is not meant to be a lease, but merely to confirm our understanding, blah, blah, blah. There was a comment earlier about the same thing about a self-rental. And the issue with the self-rental is most of these folks don't have a lease. And what's your comment always to me, Fred, that practice makes
policy.
Right? So my argument might be if asked for a lease, I don't have a lease, I own the building, and you can see for the last 84 months, I've paid myself this much money. And I've reported it on my other entity or my Schedule E, whatever it is.
Yeah, I'm sorry. I didn't mean backdate the lease agreement. What I meant is saying starting X date, I work this. I would say I would count rubbish and trash as a utility. You have to pay for it in order to make your office secure and not dirty. I've heard a lot of PPP webinars say rubbish is a utility.
Christopher, it is we believe it's cash basis, paid or incurred. So if the first one was paid there, it can be included. And at the back end, you've incurred it, and as long as you pay it in the period right after, we believe that can be included as well.
Oh my God! Watch me get like an RPO write-up for that mistake.
You self-reporting like Sean Reed does all the time?
Yes.
Henry says rubbish is also some of the tax returns that he's seen.
I will be honest, and I think we opened this up with a caveat. Like, this is when Fred and I were working on this late last night, he was like, we should include a slide that says basically ignore everything we're saying because it's going to change all next week. I think IRS and I think Treasury and SBA are going to have to provide more guidance and more regulations because it's broad enough that you could drive a truck through.
Yeah, and while Ellie's may not be used to that, I'm used to people ignoring everything I say, so it's okay.
I listen to you.
You have to. I pay you. Steve owns Life Aquatic LLC, an oceanography business. His Schedule C line 19 is $29,975. That should be line 31.
Yep.
Line 31, $29,975. I did not catch that proofreading. I apologize.
My bad.
So, that's okay. His loan is $6,245, and again, the compensation is the forgiveness portion is $4,612, as we discussed previously. Home office, you get none. The soup Nazi comes out. No home office for you.
This is the sample Schedule C that's included in your handouts if you want to look at it.
Mm-hmm.
So you could see like Steve Zissou has independent contractors, but we can't include ICs towards this.
So, Linda, I do not believe that if you're paying more in that 8 weeks and it's all for payroll, you do not get penalized for paying them more unless it brings them over $100,000.
Right, but remember that paying them the money is only one part, right? So if you had 3 employees and now if you have one and you pay all the money to one person, you're not going to get full forgiveness of the loan, right? There's more than one component.
Pending no safe harbor availability to you.
Right. Pending nothing changing tomorrow.
That too.
And they do have a tendency to release these things at Friday night, so who knows?
But forgiveness is a multi-part calculation. Everyone, not us, but everyone seems to focus on that 75% number. your head count needs to be the same as well.
Julie, I do not believe so. If you paid it prior to when you got your PPP money, you don't get to include it. If you paid that medical insurance premium on April 24th, you can include it. You will also get a medical insurance premium on May 1st and June 1st. So you're still going to get 2 months of medical insurance premiums. All right. This is the top of the PPP loan forgiveness calculation form. You got to put your SBA PPP loan number, your lender number. If you got an idle, you got to put that amount there and that application number. So this money, if you got that, would be subtracted from the PPP loan amount for forgiveness purposes. Okay.
Hey, Fred, I want to add one thing. It came up in the chat last night, but it didn't make it to the slides. We're probably going to fill out exactly 0 of these, right?
We are?
Yeah, he was saying it's probably going to be a computer program. Like you're going to punch in certain numbers. It's going to ask questions from you. Kind of like
Pursuit, which has 5,000 loans, said that they are 100% developing a web app. That don't fill out the form. Don't send us the form. We're filling out a web app. I would think 5,000 loans is near the bottom. I mean, some of these folks are in the millions of loans, hundreds of thousands of loans. So I would think they're all going to go automated, but you still need to know how to get to the number.
Okay. Somebody just posted something from bench.com, which we were praising before. They are claiming that home office expenses are forgivable. I wholeheartedly disagree with them based on what we've said.
Yes.
So
it says no. Can I use the PPP for new home office? Never mind. Yeah. I don't, bench.com is not an authority. They're a really good guide. 31 CFR is an authority. It is the code of federal regulations. In your buckets of authority, it is near the top. It supersedes FAQs.
And it's in a public. It was in a published. It was an interim final rule that was published in the Federal Register. So there's no real room for interpretation, sadly.
Yeah, and you got to remember, these things are changing every single day. So, I get confused and got to relearn this each week before we do these webinars.
I had to redo my math yesterday because I calculated an S-Corp loan math wrong because I forgot how to do an S-Corp loan math.
And as we go through this one real quickly, we're going to show something that's pretty confusing. So we know the payroll cost for this Schedule C is that 8 times 52 of line 31, the 4612. He has no interest, has no rent, has no utility, no home office stuff in there. We're going to assume that it's good that all the FTE calculation comes out to 1. So our modified potential forgiveness is the 4612 because that's the payroll. He had a loan of 6245. So what this next line 10, which was very confusing, and I spent probably 20 minutes before I got this right and corrected Ellie last night, is we're dividing line 1 by 0.75. So we're seeing that's the maximum amount. So you divide that by 0.75, gets to the 6149. Now we take the lowest amount of these 3, and that is our forgiveness. Okay. This is the worksheet table. This is where we go through the FTEs and whatnot. So we have our cash compensation from worksheet A. And then we're going to go figure out our FTEs from Schedule A, worksheet table 1. So there's like pages and pages of instructions for these things. All right. So if this was less FTEs, we're gonna reduce this, and then again, if you don't pay them at least 75% of the previous quarter, then line 3 becomes salary reduction as well. All right. So then we come down here. Basically, I'm going to recommend you read Tony Nitty's article. Go through this. He goes through each and every line number and explains it in detail. Our point is, it's extremely complicated. It's going to be fun.
The point here that this arrow is pointing out on slide 50 is if you are an owner's compensation person, just check that box. Nice and easy.
Pat, the idle amount, it was on the very first page of the application we showed at the very top. In this case, there was 0 for this example. And John already answered you.
Yeah, Therese, I would ignore table 1 and 2. I was just filling it out and playing with it.
Mm-hmm.
One of the things that Tony Nitty says, and actually a couple of webinars I sat in, is that this webinar, this form is not very good for regular Schedule C people. And there is an idea that's being floated that perhaps Schedule C with no employees, just in-home office expenses, will get their amount automatically forgiven based on that 31 CFR calc.
Correct.
Like, what are we going to prove that we spent our money on?
Yeah, the other tables if we have employees.
It's owner's compensation replacement. Like,
so, all right. Balance due. Loan was $62.45. He was forgiven $46.12. So we have $1,633 that needs to be paid back at 1%. All right. You can pay that back immediately, or you can keep it for 24 months and repay it at the 1%. You're not going to get any cheaper interest rate than that.
And remember, banks have 60 days after they receive your application in order to decide if you receive forgiveness. And the payback starts the day that you get forgiven. So if we all submit our application like July 15th or something, and we don't find back till September 15th, it's 6 months from there. So that's time for you to work on paying it back or building up money to pay it back.
Mm-hmm. All right. Frank Cross now owns an S corporation. Payroll for him is $80K, and for his employees, it's $100K. All right. PP loan is $180K, $10K in pension, $10K in health insurance. So we have $200,000 in payroll costs. All right. So we're going to do a $50,000 loan amount. Payroll breakdown, 2 FTEs plus Frank. 4 part-time employees at 20 hours, each 2 FTEs. 2 part-time people refuse to return, and Frank cannot rehire. Reduction by 1 FTE because we have a safe harbor. All right. So we get 4 FTEs in the base period, 3 in the 8-week period, but we have a safe harbor for the 3. Rent's $2,000 a month. Utilities are $1,000 a month. Rent does not change at all. He does not offer a special reduction. Space is closed to employees and clients. Utilities are cut in half. So June and July, the corp pays $5,000 in the rent and their utilities. All right. Bibbidi bobbidi boo. All right. So we go into Disney now. We go from Bill Murray to Disney. All right. Frank gets $13,333 to avoid salary reduction. We have the full-time people at $15 an hour, $9,600 for 8 weeks. Total payroll, all these numbers. We're going to make up some numbers for the bennies and the state taxes. 75% of $50,000 is $37,500. So up above, we have $38,000 in payroll. We are above the 75% of the $50,000. We are good to go. All right. Here is the application for the S Corp. And again, we can see that we have the idle amount down here as 0 for those that were looking for it. We have the covered period, which is exactly 56 days. So make sure you get those counts right. Average FTE. So we're doing this one with a reduction in FTEs. Before we had none. Now we're at 80% FTEs, and we have no safe harbor for this application here. Payroll costs are $38,000, $5,000 for rent and utilities. Everybody that was paid nobody was reduced by 25% in wages, so there's no salary hourly wage reduction there. So we have $43,000 in possible amounts to be forgiven. But because we did not have the proper FTEs, that forgiveness amount is now reduced by 80%. So the max that we can get forgiven is $34,400. All right. The loan was $50,000. So that's the max that we can be forgiven. So what we're doing is we take that $38,000, and that's more than 75% of our loan. So that's why we got the 5667. That's why we divide by the 0.75 and not multiply. again, we take the lowest number of these three items, and our forgiveness portion is $34,400. So we're going to owe them back $15,006. Now, our bond company stooge, his forgiveness is $34,400, $15,600 at 1% over 24 months. All right. As Ellie said, he submits the forgiveness app on the 20th of July. They take the full 20 days. Forgiveness notification September 20th. First payment is not for 6 months. So you get almost a year of not paying.
I did go and look at the SBA FAQs because Keith says that the 6 months start as soon as you get funded. I don't see that anywhere. However, it is important to note that interest will accrue during that 6 months.
Okay. Yes, correct. And Emily asked about the idle amount used for other purposes. And are we doing a poll right now?
You can keep talking, but yeah, I put up a poll.
So we got the poll.
I just wanted to get that last poll in.
We need to remember that the idle loan has two components. It has that first component, which is going to be deemed a grant, and then the second component, which is going to be a loan. If you use the loan portion for other items, it does not need to be rolled into the PPP. So if you use the loan after the 8 weeks to pay for payroll, you're okay. The first portion, whatever you get up to that $10,000, that is a grant. That is always used to forgive the portion of your forgivable aspect of the PPP. What is unclear is, and if it's a $50,000 PPP and you got a $10,000 worth of the idle grant, all right, does your payroll got to be 75% of the 40,000 or the 50? That I'm not sure if we know about. John, do you have more clarity on that?
I'm assuming that there's no reduction, right? That they're adjusting for the double dip, but the loan is still the loan. So and you agreed to spend 75% of the loan proceeds on payroll. So
if we go back to that other one where the forgiveness is $34,400, that's their forgiveness. And we're going to subtract out $10,000 from that. So we still use the original PPP was $50,000, and we had a $10,000 idle forgiven grant. So we calculate that $34,400. So now they owe $15,600 plus the additional $10,000. So their repayment will be $25,600 in this case.
30 more people on the poll, please, so I can close it out. 10 seconds.
There's a lot of questions on when the PPP forgiveness is due. I'm seeing October 31st, 2020 a lot when I'm doing my Googling.
Again, all this is still, a lot of it's up in the air, and we're going to get more guidance.
I'm assuming because the loan is through June 30th that you would obviously have until, it would come in after June 30th. I just logged in with my micro lender, and they don't have anything on forgiveness yet.
I was on, so the one lender did a webinar to talk about forgiveness, and it was designed for the loanees, the people they loaned the money to. So I'm on it and I'm listening, and basically they're like, don't panic, don't send us the form, don't fill out the form, don't write us, we'll write you, go away. And they're right. They're trying to, first of all, there's still $100 billion to loan, and I really think that's the driver here, is they're still lending money to make a fee, and then they're building the app, and then they're going to go start collecting information for people, but they don't want to know about forgiveness yet, so it's just interesting.
Okay. Is the poll closed and we're done?
I'm going to close it now. They've had plenty of time.
Okay, alternative payroll. So we have alternative payroll lifestyles here. All right. If I don't do a weekly payroll, all right, the application includes an alternative payroll calculation. If you do a weekly payroll, you don't get a choice. All right. Your 56 days begins from the day you are funded. If you have a more than a weekly payroll, a bi-weekly, twice monthly, you have a different scenario. It's still going to be 8 weeks, 56 days. What happens is from the date you first pay your payroll, that can be your start date for that 8 weeks. So if you're biweekly, right after the day you pay your people, that starts your 8-week process. Updates. Safe harbor for returning loans has extended as of 5/21. So that was yesterday. Oh, to the later of May 29th, after loan disbursement or cancellation. So they're wanting people to give the money back. There are so many things out there that probably should not have gotten the loans that they've taken. And I've had arguments with people who have taken loans based on S Corp distributions. Those should not have happened. They should be given that money back.
I did want to say, and I didn't put this in here, that all records relating to the borrower's PPP loan and that's submitted with the loan application and the documentation for forgiveness must be kept on file for 6 years.
Mm-hmm.
So you should probably let your clients know that, because if your clients are like my clients, they lose things after a year.
Bruce asks, what happens if a company pays some employees weekly and some biweekly? You're a weekly payer, so I'm going to say that it starts on the date of, you get the money. And theoretically, if you're paying people biweekly, you're still going to get 4 pay periods in there. So I don't think there's much of a problem there. As we can see, the application leaves much to be desired. There's probably going to change. We know it's not really suited for the Schedule C's. We're going to assume the office and home is not included. Okay. Changes. We need a David Bowie theme because a lot of changes coming this way. We're going to have a complete overhaul of this. The bill was what, 1,800 pages, Ellie?
Yes.
So a lot of it's going to have to do with some of this stuff, but this is what we know now. All right. We're looking at eliminating the restrictions for the non-payroll expenses of 25%. So theoretically, if you paid 60% on payroll, but you had increases in other costs, it's still going to be 100% forgivable. The original CARES Act did not deem a 2-year payback period. That was an SBA decision. So these if you owe money back, it may go up to 10 or even 30 years. They're also thinking that you can right now you cannot defer making payments on your payroll taxes if you get a PPP loan. All right. They're thinking about allowing that as well. And also, because we may not be fully reopened, maybe making the rehiring deadline for that safe harbor later on in the year than June 30th. I love this song. If you guys did not grow up with Schoolhouse Rock, well, yes, you're young, but you are missing out on a lot. Schoolhouse Rock rocked it. So this bill that's coming out, it is bipartisan. All right. The House is expected to pass if it has not already passed. Marco Rubio is working on a similar bill, and both sides are going to point fingers, I'm sure, at each other. If it goes through the House, it's going to go to the Senate where they're going to make the changes, and then they'll go back for reconciliation, and then it's going to go to the president to get his signature on it. Treasury doesn't want them to do away with the 75% rule because this was about protecting payrolls, not about rent and other items.
I have to tell you, a couple of weeks ago, when hotels said that they were going to start lobbying to include more overhead expenses, John and I got a bet about whether or not that would happen.
It's all about the money.
Someone's going to owe $1.
Someone's going to owe $1, just like in
Trading Places.
Yeah, Trading Places. Those two vaudeville actors. Though, I do want to say one thing. There's a lot of argument. A couple of people were screaming at me on Facebook that something to the effect of, well, what about me? I'm thinking of William Olson, right? Screwing and Mark, what's his name in Arizona? You're screwing all the owners who followed the rules. Well, you know what though? This bill didn't address a couple of things. One is businesses that can't open, right? You look. I'm a restaurant. I got a PPP loan. That's great. It's no good to me, right? Mm-hmm. If I can only operate at 25% capacity. There are other businesses that got screwed in round one. How many clients did you have that paid for sick, kept paying their clients because they knew this money was coming, kept paying the employees? Okay, I can make it 2 or 3 weeks. When this loan comes in, we'll be done in a month anyway. We'll make it. That didn't happen either. So we have people that laid off their employees and got funded the following week. So we need to make some changes. Although, Ellie, I disagree with letting them use it all for overhead.
Yes,
I think like one of the things too, and Rubio specifically listed this group, is that restaurateurs. Restaurateurs are the ones who've really been messed up with this, because many of them have been unable to open due to orders by their state, and they can't pay their people fully 75% of their loans, so they're gonna have to pay a large bill, and that's really hard for restaurant owners, because we all know their margins are really thin for the most part.
Yeah, and even if they were smart and went to takeout, and some of our local restaurants here are doing more business now as takeout with less employees than they did before, but they still have less employees, so they're not going to get that ability to pay for employees. So we get the unfairness of this. This is something I've told my kids all the time since they were small. They get mad at me. Dad, that's not fair. Guess what? Life's not fair. Suck it up and deal.
Well, wait a second. Take away fairness for a minute and just say what was Congress's intent? Congress's intent was to give you 8 weeks of payroll. Now, maybe they were naive enough to think that this whole thing was going to blow over in 8 weeks. I don't know. But if I'm operating at 25% by law, you should be able to adjust me, even if it's just my industry or my industry based on local orders, because that was their intent, right? Was to give me 8 weeks of payroll to keep people off unemployment.
Wait for it, Kathleen. Give us time. All right. Coming soon. See? Give Mark his plug. All right. Not the hair plugs. These are real plugs. So... Sorry, couldn't resist. Sorry, brother. Starting June 4th, we have 2 great sessions. We got the representation track with the knowledgeable Mark Dombrowski from the Buffalo area. He's kind of Canadian, but we won't put that past him. So log in for this. Sign up for Mark's class. I believe you can take each class individually or take it as a full track. More importantly, forget about Mark. Come to the Tax 101 series with Fred and Ellie, because we are much more fun and it's a whole different value for you. So that all starts June 4th. Click on the links, sign up for both of them. They are all really both excellent learning experiences, and see what you want to sign up for.
I don't know. Have you checked the math yet on some of those? We all know how I am with math.
No, we're going to blame this one on John because, So.
No, John let us put the slide in with the hat on his head.
He does so much better when he lets us do more of the work.
No. So people, there's ways to keep in touch with us. The COVID-19 best practices for tax pros and tax office, that Facebook group is always open. We do remind you to be courteous. This is a, thing that we post to. The files section there has got a couple of awesome forgiveness Excel documents that have gone in. Yesterday, somebody posted the AICPA forgiveness calculator. It's not behind their paywall, so everyone should be able to access it. It is in the files. I did not include it in here because I didn't want it to seem to be proprietary, like an infringement on that, and I didn't ask John before we went up. But you can go to that Facebook group and get it. Tax Practice Pros offers CEs all the time, and then you can see our stuff on YouTube. And any questions left? Have a happy and safe Memorial Day weekend. And Nicole will be sending out a course evaluation by email.
Actually, it should pop up right now when they exit, and then we will email it as well. So please fill out the evaluation. It's not required. It'll take you to a Google form. It's not required, but it helps us with decisions about changing programs and additional things, and it lets you yell at me too. So feel free. And you get to abuse me in that as well. So have fun. This video will post to the YouTube channel by the middle of the day tomorrow, and it's free for replay along with all of the other COVID-19 related tax classes we've done. I think this is 16 hours now of material up there, so that's pretty cool. Now, what did we decide we're going to do, though? There's so many other people coming out with Paycheck Protection Loan things. Are we going to do anything in depth or no?
What do you mean?
I don't know. There've been a couple of emails and messages. Like Ellie and I were on the University of Illinois class the other day. Did Jason Bowman come out with a class yet?
Not that I saw.
Okay, because I mean, this is something he would do. So I'm just wondering if there's other smart people. Knox already did one. I mean, if there's smart people out there doing it, I don't know that we need to repeat it. So I guess we're on the fence.
So we can see what next week comes, and we go from there. We know if there's going to be changes and the House passes a bill, we're going to be doing something.
If the House passes a bill with anything interesting in it, yes.
Yeah, well, it becomes law. And then Ellie gets to do all of her fun stuff, and we can frustrate her to the late evening hours the night before.
I'm allowed to cry over this.
You are.
Okay. If you need to reach us, Ellie at bqtaxpros.com, Fred at bqtaxpros.com.
No
John-
S, taxpro.com.
Oh, so there's only one pro at your company? Who is that?
We are a collective, John. We are one unit.
Collective.
That's it.
You're all pros.
Then it should be an S. And John at taxpracticepro.com, please.
There's only one pro at your tax practice?
Yes, sadly, it's me.
There it is. John at Tax Practice Pro.
With the hat.
Oh, Big Lebowski. Oh, my goodness. We could all wear bathrobes. That'd be awesome, too.
I have a new bio coming out for our next one, just so people know.
On that happy note, everybody have a great weekend.
Thank you all. We appreciate you.
Thanks, everyone, for spending your Friday with us and for your really great questions.
And for drinking with us.
Bye.
All right, end this thing, Johnny boy.
I can never find that button. It's like I'm stuck in a bad dream.
Groundhog Day. There it is.
No, actually, when Rush gets stuck in the simulation in Stargate Universe,